You mentioned on yesterday's trade, not a bad finish at all is how you write it. Overall, global equity markets uncertain but relatively stable. The bulls still have control of the ball.
Yeah, no, actually the bulls have been in relatively good shape. We've been waiting for this October correction. Everybody was wondering if we were going to get one of the classic October washout corrections. Instead, as Mike Santoli has pointed out again and again, we've had a kind of normal seasonal pullback. Then you had this extraordinarily sharp rally of up 6% in a small number of trading days. And ordinarily, that would be a big standout, but just given where things are. So I think what the viewers want to watch for very carefully here is that yield on the 10-year. We're up in a particularly interesting area. If they get to 1.70 to 1.75, will that area turn into a kind of third rail for the market? You're seeing that NASDAQ has remained relatively weaker or weakest of the three indices that we're looking at. And I think that's because they're afraid of the impact of higher yields on the high cap tech stocks. It's been maybe not poisonous, but a problem in the past. And then you've got the individual problems as Snap and other things that you've been mentioning this morning. So keep a strong eye on that. Powell will be talking late morning at an international conference. No one expects any wild surprises out of him. I mean, he walks on eggshells as much as he can. But any move in that 10-year can have an important effect on the market at a critical area, because we're trying to consolidate those relative gains here, and they could move rapidly if there were a big surprise in yields.
Right. All right, a couple of things in terms of worries that the markets had to process so far. One, on Powell, these new trading rules, some argue, does help his renomination prospects. The other is that the president's sort of giving in on corporate tax hikes, even though there are some who think it still may happen. Some argue means the market has one less thing to worry about on that front as well.
Well, yeah, but the old "be careful what you wish for" call. I heard several people come on air and say, gee, we're not going to get a hike in the corporate tax rates, so therefore that'll be great for the market. But if you hear in the background, some of the things they're talking about anyway is taxing corporate buybacks. And the corporate buybacks have been a key support for this rally that we've had over the last couple of years. I disagree with Senator Warren, and some of the progressives say, well, that's manipulative of what you're doing. You could look at that depending on what's going on, but what it really supposedly historically says is, look, I've got money here, and I can't think of any better use of it than to put it in my company because things are going so well, my sales are great, my operations are strong. So that corporate buyback has been a really positive reinforcement. So it's one thing to get away from corporate taxes, but if you're going to start to charge for buybacks, that could put a dent in the market.
Shepard Smith here. Thanks for watching CNBC on YouTube.